Hey, good morning, everybody. How's it going? I just got a note from my wife. Go have fun with my friends. So here we are today. Hope everybody had an awesome weekend. Stock futures are up this morning, so we're actually having a pretty good start to the day. If you could just do me a quick favor, just confirm that the audio visual is good. We actually have a bunch of stuff to talk about this morning. I'll just give you a sneak peek into what we're going to talk about. We've got a bunch of good topics today. We're going to follow up on something that we discussed like my new shirt, something that we talked about last week, which is trading the market leaders, and actually going to do a little bit deeper dive into that. We actually came up with 3 different ways to identify new stocks to buy. So if this is your first time, welcome to Stocks for Breakfast every morning, 7:30 a.m., Monday through Friday. Make that clear. Stick around. I'll be back in just 1 second. Okay, so as with everything we do on this video and on our videos, everything's for educational purposes. It's up to you to make the final decision. However, it's my mission to help you make better decisions, and that's actually what we're going to do today. So we're actually going to jump right into it. I want to say hello to a couple of people. I know I was reprimanded last week by somebody that said that I say hello to too many people. I don't think that's possible because I want you to know how much I appreciate that you're here with me. So Foolish Niles here every day. Obviously, you have to be a little bit older to know that that's Fraser Crane and his brother Niles. Ganka Kaya, good morning. Hope to see you on the other side soon. John Bates, always a pleasure, my friend. Let's see, Milky Fade, Don Postma. All right, awesome. Let's see, Bob Curtis, how's it going, man? Juan Visa Thama. All right, that's an interesting name. Wow. All right. So let's see, Cecil Lake, good morning, and Abe Harms. All right, so we're going to hop right into it. We're going to get right into the topics. I want to respect everyone's time. So what we're going to do is we're going to run right down this list, okay? We're actually going to go right down the list, and we're going to talk about a follow-up to what we mentioned last week, which was 3 different ways to find stocks. There is finding leading stocks in the leading sectors. There is building a universe of stocks that you trade day in and day out. And then there's also just running chart patterns on everything, Wall Street, and then you pick and choose from those stocks. Today, we're going to talk about the first one, which is market leaders. And we're going to work our way down into that. So I'm actually going to pull that back up on the screen. And we're going to work off of this. There's actually 2 different ways. So I'm actually going to minimize myself on the screen here. We're actually going to talk about 2 different ways of doing this. And you definitely want to take some notes here. You can obviously watch this video again later. So when we're talking about stocks to buy, when we're heading into the stock market, our number one goal is to make it as easy as possible. And the easiest way to do that is to be on top of sector rotation, which is something that we do pretty much every day here in the community. And this is one of the charts that's absolutely positively something you need to have set up. Most basic charting platforms will allow you to do this where you can put multiple multiple charts up. Could be multiple time frames, but these are all daily charts of the major sector ETFs. So this actually is something that you don't see in the numbers. A lot of people like to run scans and that kind of stuff, which I do. We talk about scans all the time. But before I buy a stock, I want to get a deeper feeling of the overall picture of the market. Is the market fading? Is the market pausing? Is the market breaking out? If it is breaking out, how many sectors are breaking out? Which stocks within those sectors are breaking out? If we're kind of choppy to sideways or even slightly bearish like we are right now, I want to know that because that's actually going to set my expectation for follow through. Remember, everything we do is what are the odds of my stop loss being hit versus my profit target? Literally every single piece of that puzzle that we put together is built on that one question. It is by far the number one question. It's not what is the entry. It's not all of that little fancy technical analysis garbage that too many people focus on. It's important, but it's not the primary decision. What are the odds of my stop loss being hit versus my profit target, and how do I stack the odds in my favor? That's a really big thing, okay? That's a really, really big thing. So that's the first chart that we're looking at. I want to get a bigger feel for what's going on in the overall market. I want to get it across individual sectors. But also one of the biggest things that I want to know here is which stocks are, which sector ETFs are breaking out, which ones are showing relative strength, which ones should I be looking at? That's the first step. Okay, so we look at the big 3. We look at the NASDAQ, the SPY, and the Dow, and then we work our way over into the other ones. Now, we also have the sheet of sector rotation that we show every day, and that's something that I kind of do behind the scenes for the members of our private community. But this is where it starts. This is one way of doing it. Now, the reason that we show that other sheet, let's see. Let me see if I can pull one up. This is actually one from last week. I don't have today's up here right now, but this is one for last week. This is actually from last Thursday, September 9th. So you want to see the percentages, you want to see the chart patterns, you want to see what's going on the last day, the last 2 weeks, the last couple of months, and then you start to put that argument together. Remember, everything that we do is building an argument for accepting risk. So the next thing we want to do is how do you actually find those stocks? Because if we stay in the context of what we're talking about right now, we want to find the market leaders in the leading sector. So everything starts with the big power pyramid that we have. We have the market, sectors, industry groups, and then stocks. So there's two different ways, and I think I want to introduce you to both ways. I was trying to weigh whether or not I should give one and keep it simple, but I think that we have a pretty good group of people here that are pretty smart. So what we're going to do is we're going to work our way over here, and we're going to walk through two different ways. Now, we actually posted this last week. I'm going to pop this in the chat so everybody has the link. And I think I've done this before, but I want you to have it anyway. So before you're looking to buy a stock, you need to know which stocks meet the criteria. The easiest way to do that, and again, you see we have all the books in the background here, right? There's probably, I'm actually going to grab one book. Somebody actually asked me if this was a Zoom background. It's actually a real background. So if you go into these two primary books, and this is one, these two I think are two books that everybody should have in their library. And the reason I'm bringing this up is because this is classic trading. This goes back to the beginning of the stock market, and especially as the stock market started to pick up, where all of these books, all of the books that are widely considered classics, they're classics for a reason, because what they show works. Let's take out of what happened to Jesse Livermore and how his life tragically ended. The strategy, which was also the foundation of this book, which is finding the market leaders and then trading the leaders in those stocks. Now, we're going to talk about two different ways that will make it very easy for you to get in there and find those ideas. Okay, so the first one is very simple. We're going to take a look at the sector spiders, and then you're going to click over here on portfolio. Let me actually make that a little bigger so it's easier for you to read. So then what you're going to do, and what I recommend doing, is then you're going to go into the top weighted stocks, because the top weighted means that it moves this ETF around significantly. So when you're looking at this, and we're looking at the XLV, which in this corner is over here, you'll know that if this is moving, that which stocks you should be jumping into. So if we go back to the screen over here, we're looking at Johnson & Johnson, United Health, Pfizer, Abbott, and so on, all the way down to whatever percentage. Now, I don't recommend having all of them. I'll pull the book up again, and I'll pull both of those books up again in just 1 second for you, Rajesh. So I don't recommend having all of them, but I do recommend having anywhere from 3 to 5 that match your criteria. Now, this is actually an interesting part, because there's one way of doing it where you go right into the sector ETF and you pick out the market leaders. The other way is, and the key to what I just said before is kind of important, is that matches your criteria, because you're going to see in a second that the stocks that are the highest weighted in the sector ETFs might not necessarily be the stocks that you might want to trade right now, because our job is to weigh that balance between volatility and risk, right? So we might want to gear, depending on your experience level and your risk tolerance, you might want to skew that a little bit towards opportunity a little bit more, or volatility, which means that they move a little bit quicker. So I'll show you the books in just 1 second. I just want to make sure I stay on this thought process. So when we work our way over here, obviously we clicked on XLV within the spiders, and then we clicked on portfolio. And by the way, if you want, you can download this. There's probably like 80 stocks in there. The other way of doing that, and I talk about using FinViz all the time. This is a really great software, a really great, you could get the free version or the paid version. The paid version is $35 a month, completely up to whether you're a part-time trader or a full-time trader. But what I want to point out is we always start out with my foundation, which is at least $15. I don't trade penny stocks or anything along those lines. Then I go to average true range, which is $1.50. and then over 2 million. So in the healthcare sector, which again, similar to here, right? Healthcare, XLV, this criteria pulled up 22 stocks. So 22 stocks meet that criteria: average volatility, which is average true range, and average volume. Now, here's the interesting thing. You can sort it by how it performed. You can sort it by the average volume of what it traded. So if we go over into overview and we go to volume, you might choose to trade the ones that have the most volume every day, which means that there's a lot of liquidity. There's a lot of institutional activity, which, by the way, that's a big thing to learn. One of the most common things to learn is, do your stocks have institutional activity consistently? And again, for Rajesh, I'll pull these books back up. First one is How to Make Money in Stocks by William O'Neill. And part of the canceling method, the I is institutional support. And in Reminiscences of a Stock Operator, I don't know if you can see that, by Edwin Lefebvre, I think his last name is Lefevre. Jesse Livermore talks about something similar, but he talks about pools of operators, which obviously they had a much different name back in the day. But it was really somebody who has deep pockets. The way that we do it in our private community, we call it order flow. And the reason order flow is the term that we use all the time. If you don't know, when I had my trading firm, Keystone Trading Group in New York City, we actually had 25 specialists and brokers come off the floor because they changed the execution system back in 2007, February of 2007. So they taught us how banks and hedge funds and all those guys send orders down to the floor, and they got paid to work those orders. You might have heard something called VWAP, volume weighted average price. They had to work those orders around VWAP and try and get the best price. The better price they got, the more orders came down to the floor. So that order flow is where they made their commissions. So how does that play into all of this? So that basically means that the more order flow you see in a stock, the more institutional attention a stock has. And then you start to see that manifest on the charts in larger green or larger red candlesticks. So when you see a stock that has mostly what we call melted candlesticks, where it opens and closes in the same spot day after day after day, there's really nobody getting in there and shoving it in one direction and staying there and keeping that bullish order flow, higher highs, higher all across like days, weeks, and months. However, the other side of that is when you do see a stock that has consistent large green candlesticks, consistent higher highs and higher lows from one day to the next, 1 week to the next, and closing near the highs, that means the smart money has attention on those stocks. And those are the stocks that you want to pay attention to, because those are the stocks where active traders make most of their money. So we're going to show you what I mean by that on this chart. So if you remember, when we looked over here, we just looked at the holdings in the XLV and which ones had the largest percentage in the in this particular ETF. Again, there's a whole bunch of them there. We're just using XLV as an example. But if we go over here and 22 stocks meet this criteria, I'm going to click over here on custom, and I'm going to do something just a little bit differently. What I'm going to do now is we're going to take a look at average true range. So we talked about before, average true range is how much a stock moves on average from the low to the high over a certain amount of period of days. So that kind of tells you what the volatility or the profit potential on what a stock normally does. So a stock that has, let's say, a $1 average true range, that doesn't really fluctuate that much. Nothing wrong with that if you're going to hold that trade a little bit longer and you're not looking for that most immediate move. Stock like, let's say, mRNA, let me pull that out a little bit for you. Right over here, mRNA, which has obviously been a stock that's been very strong recently, has an average true range of $29. So there's a really big difference in understanding the volatility. Now, here's something that's really advanced. I remember when I first started trading, we would sometimes pick stocks that had a little bit lower average true range because you wanted to still learn and manage the downside. You're like, I don't want something that moves too fast because I really can't handle that yet. I want to be able to feel confident in my trades without the stocks volatile, too volatile. That was way back in the day. But here's the downside to that. The downside to trading stocks that don't move that much, and again, that much is relative to everybody. You have to get comfortable with which stocks you trade. The downside is you're limiting your downside, but you're also limiting your upside. So it's a balance that we all have to weigh when we're trading, is really working through what is the appropriate volatility for how much you can handle right now at this particular moment in your trading experience. Now, there's an advanced way of having that discussion, because we can also talk about, it doesn't matter if it's a $3,000 stock or a $20 stock, because if you risk the same dollar amount, then you just get the share size the same. And that makes sense. And that's actually the right way to do it. However, some people can't handle watching stocks go all over the place. So that's a part of trading. And again, I use driving as an example all the time. It's super interesting that you really can't teach somebody how to drive faster or slow. Like you can't. It's like somebody's got to get on the road and actually get their comfortable miles per hour that they want to drive. Like me, I'm usually in the right lane. I'm like an old man, and I'm kind of conservative. But trading is the same way. Trading is the same way where you have to trade and watch. Best case scenario, trade, but you have to watch the stocks that you put into your list. So if we go back over to this list and we start to take a look at some of the stocks here, Moderna, BNTX, NVAX, NTLA, and Saba, we're going to talk about in a second. Docs, the top 6 stocks, I believe, or maybe tops, out of all of those, Moderna and what are the other ones? Moderna, BNTX, NVAX, NTLA, Saba, Docs, none of them are here. So this is really where you learn to be a trader, where you stay on top of this. So if you remember what I just showed you about this chart and this nightly spreadsheet that I put out for everybody every day, you need to be on top of this every day. I know, and I know you're like, oh, I want trading to be easy. I want it to be simple. I want it to be push button. I got to tell you right now, if you want trading to be profitable, you got to go the extra mile. The extra mile is not crowded because most people won't do that little bit of extra work. Seems like we have a lot of good people in our community here that like to really want to learn more. That's why you're here at 7:30 in the morning, which I appreciate like you have no idea. Oh, by the way, if you find value on these videos, and I truly hope that you do, please do me a favor, click down and subscribe and hit that alert button, smash the like button. That would mean the world to me, and it also lets me know that I'm helping you. So those are the 2 ways to do it. You can go into the ETF, and I'll just pull them up on the screen again real quick so that you can do them on your own. You go to this page in the sector ETFs. I just put that in the chat there. And you can start to choose the top 3 to 5 weighted stocks in each sector. And that's probably a good conservative way to do it. Or if you have a little bit more experience, then you go and do a scan in an individual sector, and then you run that scan by average true range because those stocks have the most volatility at this exact moment. So if we went over and we did the same thing, let's say in financial stocks, the list went from 22 to 50. It's a much bigger list, and we want to make sure that we're only looking at stocks. So it's got 20, and now we do the same thing. You can see that Goldman Sachs is in there. UPST, which has actually been a really, really strong stock over the last month or so. Hopefully, if you're an active trader, you've been watching this stock recently as well. Okay, so I wanted to make sure that we got across that because we got some really good feedback and comments, which, by the way, that's another big part of what we do. If you have any follow-up questions after we have this call, definitely in the comments below, leave your comment and any question you have about what we talk about, and I'll always get back to you as soon as I can. So I wanted to follow up on that, but now we're going to jump into some other by the way, if you start to put that stuff together and you have some questions, like say you start to go in there and you're not sure which stocks or what kind of volatility, again, leave that kind of comment below, and we'll have a discussion about that. Okay, so we're going to work our way down the list right now, and we're going to talk about Apple. Apple, big thing in the news, obviously last week and this week. So where are we with Apple right now? Obviously, Apple. If you weren't trading Apple last week, that was the day. And here's more importantly, here's what happened on the intraday chart. If you happen to be day trading stocks and day trading Apple, well, Apple actually came out with. They didn't come out with. They got hit with some news, and it was all about the App Store and whether or not what they're doing needs to change, and the battle with Fortnite and all that kind of stuff. This is the interesting thing here. So $82 billion in market cap was shed on Friday alone. Now, we also have the iPhone coming out today. So the question now is Apple, which is up slightly right now, is Apple now a discount for an active trader who is looking to buy here, buy this breakout, buy this breakout, buy this breakout? You saw it. Has that affected your opinion? Has that changed your opinion about whether you should be trading Apple right now? So let's get back into the conversation that we just had about market leaders and whether or not you should be trading Apple. It's got news. News is what we want. We want the news to be active, consistent, and tradable. Apple meets all that criteria right now. Now, obviously, the short side of the market on Apple was better on Friday after the news came out. The news came out and the stock continued to trade to the downside. it's a slippery slope right now for Apple because the iPhone is coming out while they have this other news story that is basically an attack to how they make money. There's no other way to put it. And we're going to get into Bitcoin in a couple of minutes as well. So right now, Apple is absolutely in my radar. It's absolutely in my game plan. It's just a question of whether or not the order flow starts to turn around and we get above Friday's low and stay there. So that's going to be the first line in the sand. Obviously, the iPhone coming out later this week, I think Wednesday. I'm not 100% sure. Whatever date it was. So that's the take on Apple right now. It's good for volatility and probably going to get some two-way trading if you're an active trader. So it should be on the radar this week. Another super interesting story this week, and I want to throw this out there for everybody, just as a question, which is this came out late Friday afternoon. Aldo in our community posted this. I actually did not catch it. Fed officials sell stock to avoid apparent conflict of interest. So now here's the question I'm going to throw out there, and you can type in the chat, give me your opinion on this, but why all of a sudden are Fed officials looking to sell stock? Why all of a sudden are Fed officials now feeling like this moral obligation to get out of stocks? It's a little shady. I don't know. I don't know. All of a sudden now, out of nowhere, that they have this urge to be getting out of positions, and they're saying that they want to avoid a conflict of interest. What about the Fed having stocks, or any political official having any stocks at any point ever? Interesting. It's very interesting. I'm not saying one way or the other, but man, that is a really, really interesting headline. A really interesting headline. So yeah, you know what, man, I don't disagree with that. James, same thing. I don't disagree. I think that's kind of like the inference, right? So we're going to talk about Saba here. Lynn Ramirez in our community is all over posting the news stories that we need to stay on top of. And she's been all over this one in Saba. Now, obviously, Saba got absolutely clobbered over here. It's been a really good active stock, which, by the way, if you go back to what I just said a couple of minutes ago and paying attention to the stocks that have larger green candlesticks, the stocks that are active, the stocks that have institutional attention, that's a big thing you want to write down. Again, every day we're going to have some posted pad notes. Institutional attention are the stocks that you want to trade. And those are the ones that have consistent large red or green candlesticks. So obviously Saba meets that criteria, and the stock got beat up pretty good. But now they have a big investor presentation that's actually going on this morning. And to see the stock isn't really reacting that much to it. The point that I want to get across here is now there's been a lot of questions about the stock. The stock is very tradable, and when it moves really, really well. There was a 5-day period here earlier, about a month and a half ago, where $73 to $140. So the stock almost doubled in just basically a week. So it's one of those stocks that, as long as you're on top of the downside, whether you're day trading or swing trading, I'd probably be looking for a little bit more confirmation. Maybe we'll get that today. But this is a stock that should start to be something you watch, because if this actually starts to get some better news, we can actually head right back up towards 100. I'm not saying it's going to. We need to see the footprints. I'm actually going to show you another chart where the footprints are starting to look a little bit interesting, despite the fact that the stock's going down. So this presentation for Saba is interesting and should be something that, at the very least, has you watching the stock. I don't know if you can see the whole thing. At the very least, having you watch the stock as something to go forward. All right, another stock I want to keep an eye on here are some of these electric vehicle battery stocks, and specifically you see 3 of them here: Blink, CHPT, and EVGO. There's another story from Friday afternoon. This sector in general has just really, really been looking for a reason. There's no other way to put it. You can see that this is just one supersonic pennant that is just waiting to be broken. And if you're a classic technical analyst, you know that the tighter and tighter and tighter that something like this gets, the bigger the move out of this. So this is really going to end up being, I don't know what you're saying there, Helena. The move out of this might be today's catalyst. We'll see. So again, just giving everybody the stocks: BLNK, CHPT, and EVGO. So anytime that there's conversations about this, it should be on your radar. Something very similar to what we trade quite a bit or watch every day, but haven't traded in a while, are the solar stocks. So you can look at this and say these stocks have been a mess. Yes, but this is what we traded last year. So that's the reason you want to have these kind of stocks in your radar. When these stocks move, they move really, really, really well. Really, really well. Okay. I want to work our way over into Bitcoin futures. We trade mostly the miners. I trade mostly the miners, but you can see that they're actually down again. So it took a 10,000 point hit here last week, coming off of this breakout over 50, which was a big level. And now they actually have not recovered since that move, since the El Salvador announced the Bitcoin purchase and all of that kind of stuff. So as of right now, we are seeing some bearish order flow in Bitcoin. And as of right now, they haven't recovered, which is pretty interesting. I know a lot of people in the community are trading Bitcoin. The two stocks that we've been trading mostly have been Merit and Riot. And believe it or not, Riot actually is bearish order flow at this point. So Bitcoin doesn't recover. And if Riot is easy to borrow or shortable, I'm actually going to be looking to put on short sales in this stock. One thing I want to point out about the healthcare stocks, to stick with that theme. You know that every day, one of the biggest things that we talk about every day is order flow, and order flow from 1 hour to the next, order flow from one day to the next. And it's the easiest way by far to understand whether or not stocks have right now, what kind of attention that they have from the institutions. So we're going to take a look at XLV and just kind of like spur your thought process for a second when you start to look at your stocks, maybe give you a little different way to look at things. They were strong. But a lot of them right now are selling and selling for a few weeks now since FDA approvals, which is pretty interesting. So if we go over to the XLV, you can see Friday, the last 2 days, Thursday and Friday, well offered, lower lows, lower highs, and red. Work our way over to the weekly charts, also well offered and red. And now working our way over to the monthly charts, also red. So no matter what the longer term opinion on those stocks are right now, as of this moment, they are seeing selling, and the sellers are in control of the stocks. So the last one that I want to walk over right now is Peloton. If you did not happen to catch Peloton on Thursday and Friday, just two blistering moves to the upside. Very, very obvious. The challenge there, though, is the fact that they were hard pushes to the downside prior to that. They were actually in bearish order flow. So if we actually zoom out over here and go here was earnings. And big bearish gap down since earnings, a couple of days, maybe 7 days, with plenty of room to go to the downside. Absolutely, under no circumstances was that a great opportunity to be long, especially after the earnings gap to the downside. But then you get this and you get that. And that's actually what we want to focus on today. That's actually what we want to finish up on today, because we're running out of time. We have to head over to our private meeting in a few minutes. You need, as a trader, you need to have some sort of line in the sand. And this is really the foundation of tape reading. You need to know the one price that matters the most. If that price is validated, you continue to trade aggressively in that direction. However, and this is where a lot of traders get hammered. This is where a lot of traders lose money, just for the fact that they don't have that line in the sand and they don't understand that it's okay to let a trade go. So we actually had Peloton in our short sale list last Wednesday for obvious reasons. The bearish earnings gap, 7 days of selling, plenty of room to go to the downside for a potential short sale. But then Thursday came and buyers came into the stock with a fury. And I want to leave you with this as the last thing we speak about today. It was absolutely in my short sale list, but I didn't trade it because it didn't meet the criteria after the market opened. It's such a big lesson. Now, raise your hand if you ever went into the day saying, I want to be a buyer of a stock, and the stock just keeps slowly melting lower, and you continue to buy it, and you continue to buy it because you're stubbornly saying, I wanted to buy that stock coming into the day, but it's not validating your thesis. It's not validating your argument for wanting to buy that stock, because at that moment that you're buying it, it keeps going down. So you need to have some line in the sand. You need to have some price that matters to you. Whether it's yesterday's close, whether it's today's open, whether it's last week's high, it doesn't make a difference. You need to have that and stick to it. So if you go into the day and your plan starts to unfold, and in a particular stock like Peloton, I'll just pull that up again because it's pretty darn amazing what happened. If it doesn't meet your criteria, you leave it alone. Do not fight the order flow. When the order flow catches a bid, and you step in front of it, that is the easiest way to be frustrated and think trading doesn't work. Trading works, but you need to follow what you scripted out to do. And I want to finish up again on something that we talked about last week. If you have 5 stocks going into your game plan during the day and 4 of them do absolutely nothing that you thought they were going to do, which is common. Let's face it, nobody's perfect. When you can't predict what's going to happen the next day, it's our job to build the argument for what's probably going to happen. So again, if something like this happens where you came into the day wanting to be a buyer and that thing rockets back in the opposite direction, you just leave it alone. But here's the thing, and this is such a subtle thing that so many traders just never realize. If 4 out of 5 stocks do what Peloton did, nothing that I expected them to do, but 1 stock does exactly what you expect it to do, you better print money because that stock is doing exactly. Stop worrying about the other 4. Stick with the one that is making money and trade it like you mean it, which actually brings me to another point. We actually had a really good quote by somebody in our community over the weekend, Harry. Harry actually had a trade, and it's something that we teach as a huge part of understanding how to be an active, successful trader. Harry went through the home study course, the programs that we have. Actually, if you want to learn more about that, click the link below. Got stopped out of 3 trades for small losses, which is what we're supposed to do. You put on your risk, you accept the risk. Got stopped out on 3 trades. Got back into one of the trades he got stopped out on and made way more on the 1 trade that followed through than the other 3 that he got stopped out on. So the big lesson here is getting stopped out of a trade does not invalidate the idea. So if you did all of that work, market closes at 4 o'clock, you take your break, you go to the gym, you have a coffee, whatever makes you relaxed after the market, you go back in, you do your game planning from the time the market closes until the market opens the next day. You got all of that depth of knowledge about you want to be involved in those stocks. Putting that trade on, taking a loss on the trade, but the idea is still valid, you better start setting alerts for the next price you want to get back in. So if you buy a stock that goes up, pulls back, and I'll just use a number. Your entry price was 50 because that was a big breakout level. You got stopped out. It pulled all the way back to, let's say, 49.50. Set an alert again at 49.90 so you know when that thing gets back up there and you get right back in. That's the difference between somebody who's trying to be a better chart reader and somebody who's trying to be a trader. Chart readers don't take that extra step. Chart readers say the charts didn't work. The bull flag didn't work. What did I miss on that breakout? It's not the setup. It's the reality of making money over trades, over probability, over a larger sample size of trades. So I want to give Harry a really big shout out because that's a big deal. I know he's working his tail off studying and asking a ton of questions on our coaching calls and whatnot. And I wanted everybody on these calls to share in what Harry learned last week. And I was very excited to see that because when I logged in and I saw the quote, I was like, wow, that's awesome. That's real trading. That's not chart reading. Chart reading is, did I miss something on the entry? Did I get in too early? None of that. That's not the important part. The important part is, did you do the hard work to find good ideas? And also, again, this is a mistake that I used to make when I traded. I would put a trade on, and even if it was a profitable trade, I'd immediately go and look for something else to trade. That stock is a broken ATM. If that ATM is broken and money's falling out the front, don't go to a different bank. Stay there. Stay with that stock. Cycle back to it, go back to a different stock. Cycle back to it and go back to a different stock. You want to be in that stock. If that stock is a broken ATM and it's paying you, stay there. If you have institutional attention on that stock that day and you have volatility and you have room to go, make what you're supposed to on that stock and don't care about anything else. Stay there. It's not going to wear itself out. Continue to trade that stock if it's trading well. And that's another big part of trading. If we could manage the downside, then you're around long enough to understand how to make more when the market's good and when your stock's good. So if we go all the way back to what we talked about at the beginning of the call, start to do a little bit of a reconnaissance on which type of stocks you want to put. Do you want to put the biggest holdings in the sectors into your watch list, or do you want to go to the sectors and the stocks that have the most volatility, which we measured from the average true range? All right. I have to head on out. I have to go to our other game plan meeting. If you'd like to learn about joining our game plan meeting, click the link below. Again, I just want everybody to know how much I really appreciate that you join me here every day. It means a lot to me. Hopefully, I'm providing you massive value that makes you want to come back every day. Please, please, please do me a favor. If you have follow-up questions to everything that we taught in here today, click below the video, go into the comments, and leave follow-up questions about what we talked about, because that's what I want to do. I want to help, but I need you to participate and leave those questions below there. If you found some value on these videos, definitely click down and subscribe and hit that alert button. That would be awesome. I'd really appreciate it. And you'll also know when the next Stocks for Breakfast is coming out. All right. So I got to head out. We got to go to our other meeting, which starts in about 20 minutes. Have an awesome day, everybody. I want you to know how much I appreciate it. Oh, by the way, we're actually having a futures trading webinar, futures trading workshop on Wednesday. I'll post the link and give everybody notice for that tomorrow as well. I know a lot of people are observing the holiday this week as well, Yom Kippur. If you happen to be observing the holiday, the replay will be available after that too. So have an awesome day, everybody. I really appreciate your time. Have a great day.